All right, well, good morning, active traders, and welcome to our Trading Week Ahead live broadcast. I'm Ken Calhoun, coming at you live from Colorado here on Saturday, October 1st. What a September. It was wonderful for me because I traded profitably with the inverse ETFs like SQQs, UVXY, and others that we cover in our live room for our members only. And we've got a great month ahead. Now, historically, after a sell-off September, there's often a bear killer October. How many of you think that the market's going to do a genuine big reversal in October? Or I think it's going to have a little dead cat bounce here and there, bear market rallies, but still heavy sell pressure due to all the headwinds out there in the world economy and all the problems we have. How many of you think we're going to get a bear killer big market reversal to the upside? Or how many of you think maybe we'll probably get a 2 or 3 day bounce, but then continue down? That's my vote, but don't let me bias you. What do you guys think? No, big market rally, then a sell-off. Yeah, big market rally, good. Short the market, right, Will? Short. Good morning, Ken. Bear market still in play. Hey, Mir, it will go down like 2008, right? I think we'll take out the COVID lows. I'm banking on it. Collapse, right? Continue bear. Okay, so the bears have it. Let's hope the sell-off continues. Yeah, because I'm long, I'm long the inverses. No, it's gonna be tough sledding. I'm going to tell you this right up front. It's not going to be an easy, September was a piece of cake, right? September was easy money for us bears, right? Just look at this. Anybody who had trouble trading this, maybe trading's not for you. This is so easy to trade the SQs on the way up, right? Both day and swing trading, as well as our UVXY. It's going to be a tough market to go, though. It's going to have head fakes and it's going to have reversals. So you don't want to go it alone. Hopefully you'll go with me in the live trading room where I walk you through both swing and day trades with real money trades I show daily for everybody. So let's go ahead and start with our broad market and where we're at. By the way, I will say a credit to Jim Cramer had an especially good episode last night. Not the regular one, but he had a special episode on the VIX and volatility and some really smart observations with somebody, Sebastian, he works with. So do tune into that on YouTube somewhere. Kramer on the VIX from last night is an especially good episode. It has some very good points, even new points to me. So some good insights from the guy, and they made sense. So I would take a look at that. Anyway, broad market's been in a continued sell-off. We lost the low there under the 3,700 now, and we lost the 3,600 yesterday. So we're at new lows here, which is great for being bearish. And remember for those of you live members, I told everybody fade Wednesday, right? I said, that's a BS. And I went heavy along the inverses like UVXY, et cetera, on the drops here. So they've been doing well. Now what's going on with that VIX? Key support resistance levels, I just use 3550 S1 and right above this tail here, say 3700 R1. So I would not be going long for swings until the market gets back over 3,700 minimum. And I'd be aggressively shorting anywhere under this 3550, 3570 level. Now, if you take a look at our volatility index, our VIX is currently way up in the 30s. Now, the VIX has been climbing all month long, right? Since, mid-August, it started to bounce that last week in August. And then remember, it recovered the 24. I told you, good folks, that 22 to 24 was the key support resistance area for the VIX, and to short the market if we stayed above the 24. And that was the correct tip, right? It ran all the way up here to 34, almost 35 on Wednesday, right? So we'll see. Large tails means there's uncertainty, though. For those of you who are fellow candlestick traders, and be sure to learn from my colleague Steve Nissen at candlecharts.com how to use the candles properly. The right intelligent way from Steve Nissen at candlecharts.com. No other person out there knows the candles like Steve. So learn from the genuine expert. Anyway, deeply grateful to Steve because he knows his stuff and really helped me trade better. So, and we helped a lot of traders with our courses over the years. Anyway, point is, large tails like that indicates what? Those are doji. Thursday and Friday's VIX are doji, right? Those are obviously doji. There's no two ways about it. There's a doji. We got kind of a bearish engulfment up there, but overall, we've got doji and uncertainty. So the VIX is not certain until it spikes over 35 and holds, right? Minimum 34, but I'm looking for a spike over 35. Now, the volatility index has lots of volatility, and it's been going up here for a while. But the fact that it's resting with doji means that it may be due for a pullback first week in October. So we may get a bull market bounce. No one's expecting that, but we may well get a 2 or even 3 day big, strong fake out rally first week of this upcoming week. I will aggressively build my inverse positions as those guys get cheaper during this rally, because I'm sure it's going to roll over by second week in October. So that's my forecast. Look for even a 2 or 3 day strong bull market rally next week, followed by sell pressure Friday and into the second week and third week and fourth week. So don't be faked out by, hey, the market's finally got a bottom in. Let's go buy cheap stocks that have good earnings and good dividends. No, this is a seller's market. We have extremely high interest rates and inflation and all kinds of bad things out there going on. So between, what was it, Kramer said, and I agree with him, wage, housing, and consumer. Anyway, lots of sources of inflation out there. Anyway, point is, our volatility index is uncertain with doji here, so we don't want to be aggressively short this market. That's the tip of the week. Do not be aggressively short this market / long and inverses until the volatility index breaks and holds over 35. Now, how to do that and how to get in and out and which of the instruments are best is information that's reserved for my live room members. So be sure that I'm telling you what to look for, kind of the what, but the how, the real meat of what to do and how to do it specifically, I cover for my live room members at my live room. So be sure to join the live room, especially this upcoming month with me. I'm an expert in trading inverse ETFs. I've traded 10.1 million worth of UVXY last year. So I know these things like the back of my hand. So let's take a look. So with that underway is and the trader mentioned TBT was pretty good too, right? Dun, 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 bum. Gold started to bounce a little bit. I like GDXU. If we look at our UVXY, it's been a really nice runner for us. I've been calling it long since the low 9s. Now it's up to 13. I told everyone it would hit 13, and I think some of my traders were skeptical back when it was 10, and it looked like it was going to keep going down. I said, it's going to get back to 13 within 2 weeks, and sure enough, it did. This will easily get back up to 18, 25, 30, most likely within the next 6 to 8 weeks. So if you've got a patient time horizon to build inverse positions, UVXY, SQs, SOXS, and TZA are the way to go. Anyway, UVXY looks really nice. SQs looks even better, right? Relative strength. Technology is selling off hard, and so the short Qs, the SQs, are up nicely, up at a 90-day high, right? We finally took out the 90-day high on Friday, so I obviously bought some into the close, or actually right after market, in front of my traders. Another quick tip. One thing that I do in the live room every single day at the end of the day is I buy swing trading positions. And most often this last month in inverse ETFs like this one. So in front of my traders, I tell them exactly how many shares I'm buying. I show them in the tape. I say, I'm going to trade, I'm going to buy 70 shares, right? In 3, 2, 1, click, and they see it in the tape. So I know it's really me. Anyway, you will get access to learn and see what swing trading daily picks that I'm trading every single day, Monday through Friday. And we do the swing trading picks at the end of the session, right after the bell, right at 4 o'clock till about 4:15. I go through the strongest charts, the ones that are taking out 2-day highs or gap continuations, and I tell traders how many shares I'm buying and other trade management tips. So that's exclusively for swing traders, 5 days a week at 4 p.m. Eastern. Okay. For our day traders, I'm here 8:30 till 11 and 3:30 to 4. So I cover both the extended morning session plus our afternoon for any short squeezes or end of day rallies or moves up or down in the market. So that's something else to be aware of. Anyway, back to the charts here. SQs looks great. TZA is a wonderful chart. Now it's got a cluster of a consolidation here. So it'd be obviously along over 48 and 50. If we take also a look at SOXS. So I'm long this, I'm long this. How many of you have been swing trading these things intelligently? I hope the majority of you have at least given some thought to how to swing trade. The good news is you're not too late to the party. Even though they've been going up all month, I think the market's going to crash and burn for quite a few more months, probably into maybe second quarter next year. So we've got lots of upside in these things. If you look at the 1 year or 2 year charts, they're up substantially from where they're currently at. So we're just getting started. We're just making the beginning of a big trajectory to the upside. So now is the right time to learn with me in the live room exactly which of these are worth trading, and entries and exits and where to scale in, how to scale out, and the rest of it. So SOXS looks good. Of course, I also like KOLD on a bounce, starting to bounce a little bit there, natural gas inverse, and short crude has been relatively strong. Last week especially, it took out new multi-week highs. So from a commodity standpoint, oil is coming back down, so our short crude oil, this is the short crude oil ETF, SCO, it goes up when crude comes down, is a good chart. Let me tempt you with some longer term charts on these guys, and then we will flip to our day trading charts. This is the story of short crude, right? Back in early January of this year, it had been a triple where it's currently at, and last year it had been 10 times where it was at. So this is short crude oil. This is our semiconductor inverse, SOXS, lots of upside. So when you're in the beginning stages, when you are in the early stages, wave one of a market reversal like we're in right now, we've been selling off all year, of course, but we're in the sharp, kind of the actionable, high volume pivots in the market. Now is a particularly good time to be trading inverse instruments because they're finally going to light up with strength and with really good upside. So I want to focus on helping the world's traders how to trade these things. Whenever I do my Money Show appearances, which I did a couple of recently this last month, be sure to see me on Money Show and at Stocks and Commodities Magazine, traders.com and moneyshow.com. Anyway, this is our UVXY. I think there's a little upside. Call me silly, but when this thing breaks to 40, I'll be happy because I'll quadruple my money. SQ's also short the Nasdaq. It's been relatively strong up and down here lately. You can see a bullish engulfment here led to a bounce. Didn't see any really candle. Here's a good example of when you do see a candle pattern, they're extremely strong and often work out, but you don't always get a candlestick signal at a reversal. Unfortunately, you don't see them 100% of the time. So that's where price action trading that I teach comes in. We use things like whole numbers and multiple of 10 decade values. Like in this one, I was selling traders long over the 40 and sell into the 50, then long over the 50 and sell into the 60. Anyway, so that's the SQ's chart with lots of upside still to come. If you look at our S&P, it's been a sell-off ever since last November where I said to short, right? I think it was third week in November I said to short the market and not to go long, despite the fact that it looked like it was going to keep going long, and I was right. The market sold off ever since. So lots of volatility to work with in our current markets. Now let's take a look at our day trading charts. And I'm going to wrap up early here as usual. I thank you guys for being here. Here's a quick technical tip. A high volume end of day. High volume at the end of the day often leads to a gap in the direction of whatever trend it is. So the S&P may well gap down on Monday given how huge the volume was in the spiders. Look at that, 6 million in the last minute alone. Of course, I bought this, SQs, right? And I'm also long UVXY, some size in that one, and TZA, and SOXS. So if you're tired of trading charts that go down and keep going down during a down market and instead want to learn how to trade the inverses, as well as whatever the day's gappers are in stocks, we cover those, of course, too. But I like to cover the inverse as well as the directional ETFs. Directional, meaning the long ETFs. For example, the TQs was good yesterday morning, right? We called along over the 2040, was it? 2020? And then again up at the 21 and a dime. And Soxel, we called it early back at 922. So anyway, good plays in those. We bought, or at least we bottom fished and correctly traded Carnival yesterday on the bounce way down off the 7. Anyone else catch that bounce in Carnival? I did. I traded it profitably, and I called it for my live members too. Live room members. 7. Our first call, I think it was 7. I can't remember. 715, 720. Anyway, and sell the 750. So it was good for a little bit of a bounce. Carnival Cruise Lines. No Love Boat here. Went all the way from 960 all the way down to 7. Now this chart illustrates why I like whole numbers so much. I'm the whole number guy. I teach traders how to trade off whole numbers. Obviously, this was a bounce off the $7 share whole number. Always look for pivots at whole numbers, because if things are going down, so often consolidate. Sometimes they keep going down, of course, so like this did at 8, right? But once it hit 7, that was a pivot for an over 60 cent run up. So pretty nice little bounce there in Carnival. I called it short at 870, and then I said to go long down here near the 715.20. So 2 good calls in Carnival yesterday for our members. Bitcoin plays were strong yesterday, right? Marathon, Blockchain, Coinbase, and Riot. Well, that is right. Marathon, Riot, and Coin were all up. Marathon did a nice run up to the 1180. This illustrates another good concept, which is selling right under a whole number. When you have no other data, no other idea when to sell, it's a smart idea to start tightening trailing stops, like I teach in my live room 5 days a week, right at the 70, 80 cent mark. If we got in low, say I think it was 11.15 or 20, and sell the 11.70, that's fine. So you get in right above a whole number, and then you sell. So you buy, say, the 10 or 20 cent mark above a whole number, and then you sell at the 70, 80, 90 cent mark, or trail the stop at least, once it starts to get up near the nearest whole number. And that's the whole number range-based play that I teach and trade daily in our live room. You may have seen my article in Technical Analysis of Stocks and Commodities on that, using Twitter as an example. It was a couple years ago. You might want to check the archives for that if you're a subscriber to Stocks and Commodities magazine, which you all should be. Anyway, highly recommend it, because I'm in it every month. And I got useful tips that are actually genuinely useful. So amazing. Anyway, Marathon had a good run for it yesterday, as did the other inverses, the other Bitcoins. Here's another one we called the reversal. I called the reversal, I think it was a little late at 1645. I didn't get the exact bottom down there, but we got it close enough for government work. Called it right over the 1640 for our members, BEKE. After big sharp vertical drop, by the way. What's the pattern that this teaches? Does anybody know? I'm curious. There's a very specific pattern that I teach. I teach hundreds of patterns, dozens of patterns. This is a very specific one. What is it? It's using the previous fill the gap. Right, Sam. Yeah, also, high volume Friday closed at the end of Q3. Right, people have to clear the books, so you're right. Yeah, good point. Not so much a candlestick pattern or breakout or V-shaped reversal. Hint. I use the 2-day chart for good reason. It works like a mother trucker, right? I love the 2-day chart. What did this 2-day chart tell me that caused me to call along at 1640 when it was down at 1620? What data was present on the previous day's chart that if we didn't have it, we wouldn't have any clue? The 2-day chart is critical to success as a day trader. You must have a left chart anchored. What you don't use is indicators. Morons use indicators. Professional traders use price action, baby. We don't use indicators. I saw this dumb video on YouTube by this somewhat attractive woman talking about scalping with indicators. WTF? No, we don't use indicators there, Sparky. Use price action. In this case, we use the previous day's close. The previous day shows you the open, high, low, close, and the range, which is critical. This bounced off the PDC. One thing that I teach traders in the live room is how to use the closing range. The last 15, 20 minutes of the previous day, that's often a key support or resistance level. In this case, it provided support. That wouldn't have been evident if you just looked at yesterday's chart in isolation, right? You would not see that data point that was so valuable it caused me to make a good, successful call for members. Using the previous, extrapolate. Draw an arrow over to the right, and you can see that was support in yesterday's bounce. So those kind of intelligent nuances, or one of my traders, I guess in one of the positive reviews I got, it's called them intricacies, and that's a good word. Intricacies of intraday trading, you only learn by doing thousands or tens of thousands, hundreds of thousands of trades over 20 odd years. So I teach these kind of patterns live before traders' very eyes with specific entries, specific targets, stops, re-entries, and everything you need to know to be able to trade my strategy. So it's very popular for good reason. So can you guys remember that? Hopefully that's a good writer downer. I hope that I've been of service to you. I hope that one tip alone was worth tuning in. Whenever I sign into I don't look at other people's webinars because they're boring as fudge, but hopefully mine is useful and very specific, very actionable, and very helpful to hopefully help you make winning trades more often. Those kind of nuances are important. So I hope that one tip was worth your showing up here, and it's a good one, is pivots off of previous day's closes. And also the same thing on were to trail a stop, if say the previous day's close is high and you bought down here and it runs up to the previous day's close, you tighten it and trailing stop as it gets to that, because it's likely to pivot. Just like the previous day's low, if you're doing a gap down, that's usually resistance, obviously. But the previous day's close is often even more valuable or more important, as you can see in this case. So, oh, thanks, Sam. Appreciate it. Hey, Devendra. Let's see. Why is previous day's close? Hey, you too, Damon. Have a great weekend. Why is previous day's close support? Because of the machines that rule the world, the high frequency trading algos, the HFT algorithm, use previous day's OHLC. If you ever talk to, how many of you ever talked to a Wall Street quant? I mean, a quantitative analyst for one of the big shops. I've talked to many of them over my career. And if you talk to the quants, it's a whole nother world. It's all like spreadsheet math talk, right? It's all like my talk, like statistics and numbers and ranges and price elasticity and where to exit before the market goes back down, all that kind of stuff. This is strictly based on the Boolean operators that control or that are part of the HFT algorithms. Previous day's OHLC is especially valuable and important. They use those data points to determine when to cover shorts, when to get into longs, and how to manage their trades for client order flow. So the HFT, it's the machines rule the world, right? Anyway, so that's a simple reason, but a very honest and very correct, professional reason for paying attention to data points that the people that swing a lot more size, that have much bigger, they trade hundreds of thousands of shares at a swing, or we're trading hundreds, they're trading tens of thousands. The high frequency trading algos that control whatever 68% of the book, I think, almost 70% of the order flow is machine operated. Knowing how to trade with the machines versus against the machines. I always think of Terminator, right? Or those man-machine science fiction shows. Anyway, the point is that you've got a lot of AI out there, artificial intelligence. Echo, what is your intelligence?
I've never taken an IQ test. However, I like to think I'm intelligent, even if it is artificial.
Anyway, so that's my echo. You've been trading too long when you talk to your artificial intelligence electronic device, but it's fun, right? Anyway, the point is, another reason to use previous day's chart is evident here. What's something that's identical today yesterday compared to Thursday? This is a 2-day chart, right? Friday's on the right, Thursday's on the left. What's identical? Not the direction, because it's opposite, right? Thursday was a sell-off day. Yesterday was a buy day. But what's identical or close to identical? Hey, Sam. Oh, hey, you're welcome. Yeah, right, Heidi. Yeah, exactly. Right, Tony. Yeah, you got it, man. I like that name, Tony. If I had a son, I'd call him Tony. I think it's a great name. I know Tony. I used to know Tony Oz. He's really good. Be sure to get Tony Oz's books. I forgot the name of him. The Stock Trader, and if you can find them, they're really good. Tony's a great guy too. Anyway, I like the name Tony. Range. It's the range. Previous day's range, current day's range. That tells you when to tighten the noose on a trailing stop or just go to. I never just seldom do I use a market order. Unless it's right before the bell and I want to go cash before 4 o'clock. So at 3:58, I often use market orders to get out if a trail stop doesn't hit. But other than that, I automate everything with one triggers the other orders, OTO order flow. But the range was identical. So how you use that as a trader, what that means to you as a trader is, you eyeball the previous day's range. It's like 60.5 to 66, about $6. 61 to 67, also about $6. So if you got long anywhere in here, you should know in the back of your mind where the previous day's price action based, the range, the previous day's range is on the current day's chart, and use that as your exit target, okay? That's the type of thing that intelligent professional traders do, and I like to think that I'm one of them, and I hope that I can help you guys be successful using these kind of patterns that are unknown to the general public, or at least not taught properly by people who don't really trade. I really trade daily. I trade $41 million worth of order flow last year with the 1099 P&L proof on the front of my TradeMastery.com site. So I'm authentic, and hopefully I can help you guys turn the corner and make better trade decisions, make bigger winners more often, and less stops, and be able to understand the nuances of these patterns. Because I'll tell you, it is freaking complicated, and I live this stuff. So if you're like me, you don't want to figure all the shit out for yourself. I mean, I do because it's what I do for a living. But if I were leading a normal life, like my corporate life, I wouldn't want to go into that deep into the pool and figure all that shit out because it's just too much of it. So that's where I come in. I can teach you exactly what to look for and give you all the shortcuts, how to accelerate your learning progress based on the patterns that I've trained and taught over the last 2 decades. So I hope that that's earned a bit of trust or at least curiosity. I've piqued your interest. And if I have, do be sure to register now at trademastery.com/gold. That's a nice segue into a pitch. I've done millions of sales and millions in sales my company with like under a 1.4% refund rate, refund request rate. People love my shit, which is good. I'm deeply grateful to the world's traders. And I thank you for being here. This time, only $97, money back guarantee, no subscription, no recurring. You can get me all month long in October, and I'm the guy you want to learn from for inverses, especially during bear markets. I'm really good at teaching how that all works and showing you with real money trades. Like I sent Fidelity screen caps in my email yesterday, right? The real money trades. Anyway, trademastery.com/gold. You can join me for the entire month of October for just $97. And if you don't like it, I'll cheerfully give you your money back. So risk-free, give me a shot. Try it out for a few days or the whole month and tell me what you think. And I got that sale going through the weekend, through tomorrow night. So hopefully that provides outstanding value to you guys, and I hope that y'all make lots of money this month, okay? You don't want to piss it away trading the wrong charts the right way. The worst thing to trade in this market is low float under $10 stocks. That's for morons. Professional traders like things that have big ranges, big volume, high volatility, and are easy and consistent in their chart patterns, not the pop and drop $2, news biotech stock of the day like some of these amateur kids are out there misteaching people. The professional way to trade is things that go up. And when the market goes down, that would be your inverses like SQs and UVXY, which I'm a total expert at trading those. So I hope I can share with you what I've learned. Hey, Phil. Hey, thanks, Bill. Appreciate it. Hey, appreciate it. Visual. Yeah, visuals are important. Many thanks. Excellent coverage and explanations. Thanks, Bill. Appreciate it, man. All right. So if any questions, hit me up with always, if you want to contact me, the best way to guarantee you get an answer, don't email me from an AOL email because they block my emails. Click on the support tab. It's Zendesk. And if you have any questions, feel free to shout out, and I'll feel free to just click that and type in your question, and I'll answer you back usually the same day, and happy to help out. So wanted to wish you all the very best for a successful, hopefully very profitable October ahead. Remember, it's not going to be easy. It's not going to be like the market crashes and you just throw darts at inverses. It's going to be head fakes, whipsaws, and I know how to trade those. For example, last parting thought here is, especially with UVXY, and this is to a lesser degree true for SQs as well, the inverses, you do not sell the gaps down. Unlike stocks, you do not usually sell the gaps down because they usually fill back up. And you do not buy the gaps up because they usually fill back down. Whenever I have a gap up in like UVXY or SQs, I sell it at the first sign of trouble, which works out very well for me on balance. So because usually it comes right back down to the previous day's close. And same thing on gap down. I don't panic out. No, it's against me. I give it 20 or 30 cents under support before I sell. Occasionally I will, but most of the time it bounces back up into the previous range, like the previous last few days. So that's a parting thought. Unlike regular, and there's a lot of those kind of nuances that you need to know about if you're going to trade these things correctly. So I hope I can help. You guys take care. Thank you so much for being here. And wow, big turnout. Any questions? Next resistance on UVXY at 13.25. We'll cover it in the live room. I'll give that information to everybody. Oh, thanks. Appreciate it. Oh, all these comments scrolling by. Thanks. Yeah, glad to be of help. Hey, thanks. Hey, thanks, Ted. Right, Sandra. Yeah, great volatility. Yeah, good time to be trading the markets. We've got so many charts and so many things to learn together as a team. And I've got some really smart traders on board, right? A lot of times the day's best charts come not from me, but from some of my really smart traders who spot other charts. I got lots and lots of members, we have a huge number of members, a record number of live room members here this past month. And we got lots of eyes and ears, and they text me and tell me what to look at, and I pull up the charts and answer questions. And as a team, we work to figure out this market and figure out where to get in and where to get out these things ahead of time, so we're on top of it. So I look forward to seeing you in the live room. Be sure to join now. Go to trademastery.com/gold. And I want you to join. It's only $97, money back guarantee, so no risk. If you don't, let's say, try to say this in an honest but a gentle way. I tend to work best with people who tend to be relatively smart, focused, and fast-paced. People who are really slow or maybe really new to trading, like, what's a breakout? Or I trade Forex, should I trade this? May not be a good fit. But if you've got any modicum of experience, you've got at least a couple years experience, or even if you're new and you follow, and if you have followed along with today's charts and everything, you should be in good shape. So it's not good for people that just want quick fixes, or people that are lazy, or people that are not very intelligent. I tend to resonate best with smart, focused, professional people. So if you're one of them, or you want to aspire to be like that, be sure to join the room. And also, I'm always friendly. I don't bite off anyone's head. I answer questions honestly and diplomatically in a nice way. So if you have any questions, even if it's not a brilliant question, all questions are welcome, because I was a beginner once 24 years ago, and I know other people are like that too. So thanks. Contact in the chat. To contact me, just go to my website and click on the support tab right here. That's Zendesk, and that gets through all the email filters and all that. So that's the best way to get a hold of me. Just click on support. And if you have any specific questions that are not answered on the website or the videos, reach out. All right, take care. Have a great weekend ahead, and I will see you guys